Here we go. Mr. Rushforth is here. Mr. Napolitano back in the studio again. Good to have you back, Frank.
Great to be back. I missed the ding dong, though, our little previous
The
intro.
dog's to your right.
He is here.
You know, am I on? Can
Yeah,
you just?
you are.
Yeah. Okay.
yeah, you sound good when you're muted.
Oh, how funny. I will say, though, I don't know, Stephen, if you're the producer, Stephen, if you're in charge of this or someone is, that promo or that intro is terrible. It's terrible.
I really feel, Paul.
Terrible. Terrible.
Want me to do one?
Yeah, let's go back to the old one. It was like better. It was way better. It's catchy. It was edgy. This one is
We'll get Brad on it. We'll get Brad on it.
Yeah.
Okay.
Yeah,
Okay.
Brad on it.
Boy, oh boy.
Oh, boy.
Is this indicative of what the show's going to be like?
I didn't have any coffee this morning. I'm ready to go.
Maybe you should have.
Seriously, I'm ready to go.
Too much doom and gloom out there right now.
Man, is there ever, huh?
Yeah, way too much of it. It's not the way we're supposed to be, and people need good news. And when the weather's like this, we need some good news, not bad news. And yet, everything you put the news on, it's way more doom and gloom than ever before.
Well, the train is running again. We got
Wow.
that going for us.
Oh, don't
Did
get
it run through yesterday?
Well, that's a good question.
Well, nobody was on it, I guess, so nobody would have known.
Apparently they interviewed a guy the other day, and he was the only guy on the train.
Wow.
Do home prices along the line go down now?
Well, you know what's funny? We were pricing in for years. Once they said the LRT was coming, we had already price increased along that LRT line. I don't think they're going to come down, but I definitely don't think it's as attractive anymore. I mean, it's
Well, that plus working from home for a lot of people.
working from home, yeah. But you know what? That's coming back, though. I mean, you see the government now is saying that they want people back to work. They're mandating people back to work, and I think it's. I mean, I haven't yet, but I get frustrated when my people are working from home, and I think people will come back to work, and I will think that I think eventually, after they fix it up, the LRT will be popular, and it will be popular to live along the LRT.
Yeah, assuming they can keep it working.
Well, that's it. I mean, they should have had maybe a company who knows how to run a train in snow,
Or a subway.
or subway or something. But yeah, it's been a colossal disappointment. Which is we're not talking about the subway here anyways, or the train here anyways. But at the same time, it is part of the fabric of our city, and right now it's not a good fabric.
All right, real estate.
Yep.
Guess you didn't show too many homes yesterday, huh?
Well, no, it was tough yesterday to show homes, but this is where I know this time of year you don't really have to worry too much about leaking, but you do have to worry a little bit with, with the roof, what's going on with the roof. I mean, because if you have icicles coming off your roof like I do at home, and lots of snow, if you have skylights, this is where you might see some leaking potentially.
Hey, on the plus side, though, if you see a roof without snow on it now, you know it needs insulation.
It might be a grow-op too, right? That's a classic sign of a grow-op is when you have no snow on the roof. And sometimes if you have a little bit of brown snow, it's also a grow-op. So that's a telltale sign for sure. So if you're going to do a grow-op, do it in the summer.
What does yellow snow mean?
The bathrooms aren't working.
The yellow snow, if you drive by Frank's house, that's the yellow snow. Yeah.
Jeez.
Well, we're still doom and gloom for some of the forecasts for this year. I don't know. Are you starting to see anything pick up, or is it too soon?
You know what?
January.
I was saying to Petra last night, is anytime we list a home or we sell a home, we always text the team, say, just sold 123 ABC Street and things like that. We had 3 texts last night for sales. And I know Greg, who's with us again today in the studio, I know Greg also sends out a lot of the pictures when we list homes. And sometimes I don't know about the listings, but Greg sends out the pictures, and we're getting quite a few pictures. So, I mean, I think we're listing lots of homes. We're definitely starting to sell a few more. We're on pace right now for about a sale a day, which is okay for a January. Usually we're more than that, but it's still okay for January. So I know the doom and gloom if you read the news or you listen to the TV or you listen to potentially other realtors or other mortgage brokers.
You listen to some are doom and gloom and some are going, nah, we're going to be fine. It's going to go up 4%.
I am always positive on the market because there's always some opportunity. When the market goes down, there's an opportunity to buy. When the market goes up, there's an opportunity as well. So there's all sorts of facets of the market that give us an opportunity. I think we're going to be in for what I call a bit of a flat market, but that could be anywhere between 2 and 4%. I don't think we're going to go up more than that, but 2 to 4%.
It's normal.
That's normal. That's healthy. That's there's nothing wrong with that, and I think that's where we're going to be. I think
That's assuming OFC doesn't screw this up, though.
Well, again, OSFI's proposed some potential changes coming forward, and when we heard that, it's like, all right, they're going to loosen things up. Sounds like they're going the other way. It sounds like they want to make it even tougher And again, one of the comments that they make, which is disappointing that, they make these types of comments, is that they're trying to protect the financial institutions who are lending out the money. And it's hard for, the extremely hardworking Canadians that are out there that are looking at their housing costs and seeing it go through the roof like it has. And you've got somebody who makes the comment that they're trying to protect the financial institutions who continually record record profits quarter after quarter.
Do we really need babysitting?
The banks will tell you no. The banks have no choice but to follow the regulators. But the banks will say, we've been doing this for hundreds of years. We know what we're doing. We've never had mortgage losses. So
Ever, right?
Ever. Like, are there circumstances? Sure, but not as a whole. There's individual circumstances where they've made mistakes or they've been doomed.
And even they're few.
They're few and far between. And again, we don't even hear about them because it's a cost of doing business. Like when you lend out money, there's a risk with lending out money. There should be a risk. There should always be some kind of a risk. Now, the risk should be minimal, but there's always a risk. So, right now, we've still got delinquencies at record lows. Now, are delinquencies going to go up in 2023? I believe so, but not because Canadians are purposely letting their mortgages go in default. It's because of everything else that's happening around them that's out of their control, where their salary increases are 1% and 2%, and inflation's 6-7%, and never mind the 6-7. I mean, you go grocery shopping, it doesn't feel like it's only 6% more than it was a year ago.
No.
It feels like it's 30-40% more than it was a year ago. So that's what's hurting Canadians, going to the gas pumps and having to pay, one day $1.50, the next day $1.35. I mean, that's what's hurting Canadians right now, and therefore it's limiting what they have available. And yes, there's some Canadians that are going in arrears on their mortgages. Now, most of them can get caught up. Most of them, if they've owned a home for a number of years, have got some equity in there, so they're forced. The rules that they're trying to propose, to me, is even worse for most of the Canadians that should qualify for a mortgage, because they're going to have to go to unregulated lenders to borrow money to make ends meet, and I don't know how that's helping people. Like, that's helping the institutions, who are extremely profitable, but it's hurting the Canadians. So I hope they really take a deep down dive into how Canadians are feeling, and just not interview the banks, because the banks will say, hey, the less risk we can take and the more money we can make, better for us.
Yeah, as long as all they want is an equal playing field, right?
Well, I think there should be a playing field where there is some risk associated, and it shouldn't be risk-free. Doing a mortgage shouldn't be risk-free for a bank, because they make a lot of money on mortgages and all the alternate products that they offer because a client does a mortgage. Like a mortgage, when I worked at the bank, was always, that's the anchor. But really, once we get the client with the mortgage, we need to cross-sell insurance. We need to get their bank account. We need to get everything else, because that is even more profitable than the other things. And once we get everything together, then it's hard for them to leave us, which is true.
So these things that they're looking at now, should they implement them, what kind of a timeline are we looking at?
Well, we're probably looking the second half of this year is what it sounds like. It sounds like it's a 6-month review that they're going through. Rob McClister, to me, he's a mortgage icon. He does, he's been in the business for a long time, and he's the one who interviewed Peter Rutledge. And I'm trying to get Rob to maybe call in one day so that we can get a better sense of what what that conversation was like with Peter when he actually started the report this week. So, he's disappointed. As are most mortgage brokers, but most mortgage brokers are disappointed, and people think it's because it's their business. Myself, and I can speak for myself, I'm disappointed because I watch hardworking Canadians come into my office. They're worthy of being able to qualify for a mortgage, and they're struggling to qualify for a mortgage, and they're stuck having to continue to rent when they've done everything that our parents and all the other people have done to be able to get into housing. So all of a sudden now, if the rules become even tougher, the dream of owning a home goes away, and that's disappointing, because that dream should always be available and should be within reach, and not having to go. So one of the things they're proposing is that 450% of your income. So if somebody makes $100,000, all they're saying is the maximum debt someone can have is $450,000. But that incorporates mortgage,
though, right?
car loans, everything. Well, last I checked, I don't even know if you can get a car for 30 or 40,000 anymore.
Yeah,
So right away,
no,
you're knocking
no
off
chance.
30 or 40,000 bucks. So you start deducting some of the other things, student loans. You might have a loan, so you start deducting those. And next thing you know, you're left with a $400,000 mortgage. Well, even in a city like Ottawa, which is, I mean, it's up there, but but that's where the employment is. So you can drive people to maybe communities that have lesser homes, but then there's no jobs for them. So how do we get the right mix in there? I hope they really rethink some of these changes, because I think it's going to damage the housing economy in Canada tremendously and deter people from maybe staying in this country and going to other countries. And I'm talking about professionals, people that need to stay in this country because we need them.
Wow, it sure makes the forecast difficult, doesn't it?
It's I will say this, and like Paul said last night, 3 listings. For us, our pre-approvals are off the charts right now. So we've got a lot of Canadians, or some of our customers that have gotten off the fence because they've been on the fence for the last 5, 6, 7 months because of interest rates going up. But now that the prices have come down a little bit and they're more reasonable, the interest rates are, they're in the 4s in some cases, or in the 5s. They're at least interested again in going back into the market, although most of them are saying in March or April. So we're hoping that there's another reduction in fixed rates because the recession's hitting us, where, if we can get into the mid-4s somewhere, I think our payment is much more reasonable.
I think the appetite for these higher mortgages now is there. I mean, people know they're here they're getting used to it. They're here to stay, because the beauty is I keep saying buy. People are like, well, why would we buy? The mortgage rates the interest rates are crazy. I'm like, because the prices are coming down. So now's the time to buy. Stomach that interest rate for a little bit, but now's the time to buy. And I've said it 15 shows already. You have 6 months to buy, is my opinion. Then I think the market's taken off like crazy. 6 months.
That's assuming somebody doesn't sell your house for Monday. We'll talk about
Yes.
fraud coming up.
Yeah.
Or it depends on OSFI changes. If OSFI changes are critical, and as critical as they're predicting maybe they might be, then that itself will probably kill the housing market
Kill the
for
housing
6
market.
months to
Yeah,
a year.
easily.
For sure.
521 Talk 521-8255. We'll be right back. Welcome back. Hey, we got a special guest. There's nothing like having somebody who knows what they're talking about joining us to talk about mortgage fraud. David Leith from Farber Robillard and Leith Partner. How are you, David? Well, we're doing great.
Thanks for coming on, David. Really appreciate it.
I just wanted to ask you about, we're starting to hear these stories. There's 2 of them now out of Toronto where people have fraudulently gone in and tried to sell homes. Are we hearing about this more often, or does it happen more often than we actually know?
Or homes that they don't own.
Yeah.
David, you know where we really see it in my business is on our rentals. We put a rental out there and we see people who are trying to scam and use fake ID and get deposits out of people when they don't even own the rental. And we're seeing it on the rental side big time. The one thing we are seeing too, especially when the rental market was going crazy. I mean, it still is going crazy, but there's a lot more rentals on the market now. But when there was fewer rentals and the market was going crazy, there was a lot of people that were trying to rent homes sight unseen, and that's when the fraudsters really came out, because they're like, yeah, we can't show you the house, but send us that $4,000 deposit, and then the house is yours. And that's what was happening with people. Yeah.
Must be getting more attractive to them because prices have gone up so much too. It makes it worth their while, right? But you're
That
right about
specific one got
sophistication,
thwarted.
though, because
Oh.
these people have gone through real estate agents, lawyers. ID has been checked. They've got to be very good at it.
I actually saw something on Facebook, David, the other day, which is legit or not, I don't know, but there's somebody advertising, or a company advertising, how you can scan someone's driver's license and determine whether it actually is fake, whether that is a tool that you're talking about or not. But that needs to happen, because for them to get away with this, they got to get by the real estate agent, they have to get by the mortgage agent, and they have to get by the lawyer to do this. And
The purchaser.
and the purchaser. This has to be a lot of sophistication, but it's happening.
Now,
Would you
title
say-
insurance is the key, right, David?
Deter. Yeah. And it's not costly, is it, David?
Can you add it at any time?
Perfect timing, actually, David, because we had a caller last week who owned the house for I think 30 or 40 years, asking about title insurance. So at least we got our answer right now, which is great. And even he was asking about pricing. One thing that a lot of people don't know about title insurance is, one, it might cost 1% of the price, but it also stops you guys from doing all these other searches that would cost a buyer at the same time. Correct?
Surveys.
Awesome.
David, are seniors more vulnerable, considering they probably got their mortgages paid off a while ago and have had their original mortgage more than 20, 25, 30 years ago? Are they more of a target now for these fraudsters?
You're asking personally, right, Steve?
Asking for Frank.
Break. So, David, we have to go to break here, but we want to really, really thank you for coming on and spreading some information for us. David's, a go-to real estate lawyer for Paul Rushforth Real Estate. David, how can people get a hold of you for all their real estate needs? Awesome. Thanks, David, for coming on.
Thanks,
We
David.
really appreciate it.
Or just Google David Leith.
Or just Google David Leith. Yep.
It comes up right away.
Yep.
Thank you, David. Go back to shoveling now. Bye. 521-TALK, 521-8255. We'll be right back. Welcome back.
I don't know when we're off commercial with this new intro.
I don't like that. Don't get me started on this new intro.
You
Jesus.
guys are really going to have breakfast.
Yeah, I think so.
First week, I think, in 15 years.
You know what's funny is people are probably wondering, why haven't they talked about Who Bought Breakfast yet?
Nobody did.
Nobody did.
Well, nobody did, but it's only because Frank already ate, so he wasn't willing to buy when he already eats.
And yet I got an email, I think, on Monday saying, hey, I don't eat breakfast on Saturdays. So
I'm not eating breakfast anymore.
Yeah, well, I think maybe.
I think you should.
The grump factor has gone up.
I think you
just
should.
a little.
Welcome to the breakfast show.
Let's go to the phones. Maybe Samantha's in a better mood. Hello, Samantha. Good. You are in a good mood.
Awesome.
Right, great. Well, there's somebody who's done some homework with all the terminology with the standard and the. You have good for you.
But the only thing I can say, Frank, before you get into what the difference is just like when you're shopping for a real estate agent, you're not looking for the cheapest agent. When you're shopping for a mortgage, you're not necessarily looking for the cheapest rate. You're looking for the best product. I'll let Frank continue.
Yeah. So TD, probably 12, 13 years ago, they switched all of their mortgages to collateral mortgages. Now, again, on the forefront, they'll tell you that They'll register the mortgage, and actually TD is one of the banks, one of the first ones that came out and said they'll even register the mortgage for 125% of the value of your home. So if you bought a $400,000 home, even though they only, if you bought with 5% down, like most first-time home buyers do, they would still register a mortgage for $500, and they would talk about the perks of the fact that when your property went up, then, at maturity date or even before maturity date, you'd be able to go and apply for more financing because the equity's gone up on your property, and you wouldn't have to incur the legal fees because it's already registered for the higher amount. And that's all good, and they're absolutely right. What they don't talk about is the negative stuff, which is that means they've got you so that, for you to leave them and go somewhere else, you're going to incur some fees. So they don't tell you that up front. And they don't have to be as competitive then because they know that you've got a fee associated with it. So, if you call them and said, hey, by the way, this lender's offering me 10 basis points better, they'll come turn around and say, yeah, but by the time you incorporate your $1,000, $1,200 legal fee, the appraisal cost, you're really better off just to stay with us, even though it's 10 basis points more. So that's the part that I don't like.
Not just TD though, right?
No.
TD started at 12, 13 years ago, and they're exclusively collateral. But, Well, I'll tell you. So on the Scotia side, if you deal with a mortgage broker, you have the option of taking a standard mortgage or a collateral mortgage. So you get the choice of which one you want to get. And if you deal with non-bank lenders, now a lot of these non-bank lenders are backed by the major banks. But with most non-bank lenders, you get a standard mortgage. Now, so at time of renewal, you're right that you went through the experience of if you want to move it somewhere else, you got a better rate somewhere else. Like I said, TD will tell you that now you're going to incur legal fees. You're better off to stay with us. That being said, we're starting to see now that non-bank lenders are coming out with promotions where if it's a collateral mortgage that we're transferring from, we'll do it anyway, and we'll pick up most of the cost so that it might cost the customer $200-$300 to move it, and therefore it's well worthwhile. So we're starting to see programs come out on the broker side where they'll take over a collateral mortgage. Now, we talked about the last segment, title insurance and fraud. For some people, a collateral mortgage is a good thing because once they pay off their mortgage, that collateral mortgage stays on that property, and therefore, it deters fraudsters from going after it, which is good. But, there was a circumstance, we didn't get a chance. Wish we had David on for another segment, actually. There was the other one in Toronto that made the headlines where, the people bought the house and they actually paid off the mortgage, but there was so much equity in it that they ended up taking all the rest of the equity on it. So, title insurance is good to have, but collateral mortgage is not as bad as it used to be, although you should still, I agree with you, TD Bank needs to be more upfront with it. They've been featured on W5 and Marketplace for not telling consumers that they're putting them in a collateral mortgage, but they still continue to do it.
So it would be in the fine print though.
Well,
Of
to
the
be honest with you,
17 pages that are you going to read?
yeah, nobody reads the
Or you
fine
get a
print.
broker.
Yeah.
But the lawyer also should point it out in some cases because, the lawyer should be able to tell a client that I'm registering this as a collateral mortgage. So therefore, because a standard mortgage has an expiry to it. So if you get a 25-year amortization, a standard mortgage is registered for 25 years. A collateral mortgage doesn't have an expiry date. So it's being registered as a collateral mortgage, which means there's no expiry date. So again, I mean, you're right that the best rate is what most Canadians look for. I don't know that a collateral mortgage should deter people now. I think with the programs coming out, I think if you can avoid the collateral mortgage, you should, because it does make it easier to transfer it, at the time of renewal and be able to shop around and get the best rate. Yep. Yep.
I can tell you, Samantha, though, you as a first-time home buyer, you sound a lot more educated on the mortgage side than most first-time home buyers. I'd say you're more educated on the mortgage side than most buyers in general, not just first-time home buyers. So, I mean, those are great questions. We haven't had great questions like that on the mortgage side in quite a while.
Not only that, it's so nice and refreshing to talk to a first-time home buyer.
Exactly. Congratulations.
So have you bought yet, or are you in the mortgage already, or? Yeah. Yeah. Just out of curiosity, what rate did TD give you?
5.06.
That's not a good rate,
Okay.
And that's why you need to call Frank.
right?
No.
Are you buying one less than 20% down?
No.
You're buying with 20% down?
23.3% down.
Okay.
That's impressive.
Yeah.
First time home buyer.
There's probably rates that might be a little bit better out there for scenarios like that, actually.
Yeah, I was talking to
Yeah.
how oftentimes putting down less than 20%, you get a better rate.
Yeah.
But more than 35% down, you
Yeah.
get a better rate.
474 is right.
Yeah, that 7 to 8% mortgage that people have with the high rate.
It sounds crazy though, right? As a first-time home buyer, it's like, wait a second, I'm putting 23% down, and my rate isn't as good as somebody that's putting
5% down.
5% down.
Yeah.
You're not getting insured by the
Correct.
Wow,
CNBC.
she's you know what you're talking about. You're good.
Yeah. No,
you know,
she's
you
done
know,
her homework. Good for
you know,
you.
Frank's hiring, eh? Frank's hiring on the mortgage side. If you, I mean, you know what?
Nothing. She's doing the show now.
Yeah, exactly.
kidding.
You can fill in for Frank. Thanks, Samantha.
Thanks so much and good luck. Thanks.
I read somewhere this week the average person will take 27 years to save enough for a 20% down payment.
Well,
Wow.
here's a first-time home buyer that saved 23.3%. That's a good chunk of money. I don't know what price bracket she's in, but that's
Matter.
but that's a good it's a good chunk of money for a first-time home buyer, and it's good to see. I mean, we don't see enough first-time home buyers these days with what's going on with interest rates and all the rules and the prices of homes.
That being said, I will say this though. We've noticed certainly over the last 2 years, but even over the last 6 months, there's much more appetite for parents to help their kids either on the down payment side or on the guarantor / co-signer side, because they want to help their kids. They want to see their kids achieve home ownership, and where before it was like you should be able to get it on your own. Now they understand how difficult it is to qualify for a mortgage, so they've actually been more forthcoming and saying, you know what, we're going to give you an early inheritance of $100,000.
And when you say kids, you're talking 26, 27, 28?
High 20s, low 30s, most of them. Listen, if you're going to university, you're probably not out of university until 22, 23. Paul took till 27, but
I was so smart I didn't go to university.
And he only went for 1 year.
I didn't go to university.
we could tell.
The 10 best years of
We
his
could
life
tell.
were his first year in university.
It's best 6 years of high school. Yeah.
But see, the only problem is now I'm the barometer for my kids when they're like, "Oh, I don't have to go to university. And I could do what I want."
Yeah, and they can, so long as you're a guarantor.
Yeah, exactly.
Yeah, that's just it, right? And guarantor is a great program that doesn't get talked about. The banks don't like doing it, and in many cases they don't do it. They'd rather parents go on as a co-signer. But there's many lenders out there through the mortgage broker channel where you can actually be a guarantor. And most parents like that and want that because they really don't want to be on title. They really don't want the house in their name. They do want their down payment potentially protected, but that's a different part of it altogether. I mean, you can still drop a document with a lawyer. You can register a lien against the house if you want to protect it in case your son or daughter split or whatever. So there's ways to do that, but they don't mind going on as guarantors if it helps the kids get into home ownership.
See? Get that checkbook out, Paul.
Oh, sorry, just taking pictures of my girlfriend over here.
521-8255. I thought that's what Greg was here.
Yeah.
I'll be right back. Welcome back. That one wasn't so bad. The music ends at the right time. All is good in the world.
I missed a ding dong.
Yes, I missed the ding dong too. Sorry, but I was having a little bit of trouble with my headphones there. I looked like Steve the time he came in with his glasses.
All right, Frank. Early renew. Good idea.
Do you think a recession's coming?
Yes,
Does
I
it
do.
feel like a recession's coming?
Yes, I do.
If a recession's coming and your mortgage is up in the next 4, 5, 6 months and interest rates are likely to come down, why would you early renew and give up probably a rate that's 2% better than what you're going to get today? Banks are notorious at doing this these days. They're calling clients and telling them that they're going to do them a favor and early renew. And again, I mean, the problem I have with it is you've got their economists that are predicting that interest rates are probably going to come down, fixed rates are going to come down because we're going into a recession. And then you've got the renewal people telling clients that you've seen what's happened with rates and they're probably going to continue to go up. So they're giving mixed messages. And it's disturbing because some clients will fall prey to that, and they'll lock in at 5.5%, 6%. I had one last week. They said 6.14. We're going to get you 6, and they're at 3.19.
So they're giving up a lot.
3 percentage points over 6 months. They're going to give up the next 6 months. So instead of 3.19 until July, they would automatically, starting today. You know, it's one thing if they say we'll hold that rate for you until July, but no, what they do is they put you under pressure and they say you have until next Friday, and that offer goes away. It's so they make people feel like they're going to lose out on something if they don't take it,
So
and
hang in.
it's unfortunate. I would say hang in for sure.
All right, Paul. Now it's your turn.
Oh, finally I get to talk. Fine.
We're out of time.
I thought your neck was. I thought your neck was. I
Birthdays.
thought your neck was broken this way, and I was just a guest on Frank's show today. Like,
Birthdays.
Honest to goodness, I'm buying breakfast.
yeah, you are. It's like, wow, I get to talk. Greg,
Now, a lot
Greg,
of
did you
people-
press play?
A lot of people are looking at the market right now and they're waiting to buy, hoping that they want to hit the bottom. But now the danger is, when is the bottom?
Well, it's hard to know when the bottom is, but like I said, in 2021, when we were going through October, November, December, and I was telling people to buy, and people are like, well, the market's been really tough. I think it's going to drop. I think it's going to drop. And then in January, start of January, our average sale price was $645. Within a month, we were almost up $80,000. So it was too late at that point. So I'm telling people, you got about 6 months to buy. I don't think it's going to happen like it did last year in Jan, Feb, and March. I think we're going to just be a little bit stagnant until we really find out what's stabilizing with these rates and what's going to happen with these rates. Once we realize what's happening with these rates, I think it's going to absolutely take off. And that's why I'm saying, excuse the expression, but don't get caught with your pants down, because it's going to happen. It's going to take off quick like wildfire because it's a perfect storm. We have, our millennials, who are our largest cohort, they're just chomping at the bit to buy. Eventually, we will get some more inventory on this market. Eventually, the rates will come down, and by the time that happens, it'll be a perfect storm, and it's going to go boom. And we're going to have people jumping into the market, especially the millennials, buying up lots of property. It's going to drive up the average sale price. People from Toronto, it's going to drive up their average sale price, so they're coming to Ottawa, which is going to drive up our average sale price even more.
But drive up, you're not talking crazy drive up like it was 2 years ago.
I don't know. There's some people that are predicting even a better version of what 2020 at the start of 2022 was like.
In 2023?
I don't know. I don't think it's going to be in 2023, but I'm telling you that it is going to start to creep up in the fall of 2023. So I would get in sooner than later. Some pockets of the city, some pockets of suburbia are actually really, really depressed right now. We have too much on the market in certain areas. I don't want to mention the areas in case there's people who are selling in those areas, and I don't want to sort of tamper that listing, but there's some areas of suburbia right now that are just drenched with properties, and the prices are actually coming down. It's like a race to the bottom. So if you can pick up a property and then stomach those rates and just sit on it for 6 months to a year, you will find that you're going to build up tons of equity as the market goes
Well,
insane.
if we are going into a recession, though, that would mean if you close 3-4 months from now, you might get a half-decent deal on your mortgage, on your interest rate.
Well, rates are supposed to come down. When are we going to see the full brunt of the recession is unknown right now. I mean, I can tell you that in the financial industry alone, the layoffs have been massive. They just don't seem to make the main media, and I don't know that they'll show up in the Statistics Canada's numbers of unemployment, but I can tell you that there are banks and lenders that have laid off in the hundreds and some in the thousands of employees. So, it's out there. Obviously, the job numbers they came out in January were reflective of December with a lot of the retail jobs. And, like you said, there was a lot of full-time jobs. And Ottawa's a very stable market, so we're very fortunate that Ottawa's a stable market on the job front. But across the country, I fear, especially in the GTA, I fear that their numbers are going to not look very, very rosy over the next month or two. And therefore, the bond markets are going to start to see that, and therefore we're going to start to see those bond markets come down, the 5-year bond rate come down, and in turn, it'll be some relief for some people that have their mortgages coming up either for renewal or the ones that are looking to buy over the spring and summer market.
Now, ordinarily, mid-January, you'd be saying, the spring market is on now.
Yep.
Are we delayed this year?
We're delayed. I mean, it doesn't help we had 2 major snowstorms too, right, to start January. But we're delayed. We're definitely delayed. We don't see the robust start. Even though, what are we today, like the 13th, 14th, something like that? Yeah, so we're getting near the point where it starts to take off. Next week when Dora's actually replacing me next week, ask her that question, what she felt this week, if it was a little bit more robust, because I think it might be. But I still think we're going to be a little bit delayed. The one thing I do want to caution people is when I'm back on the show at the start of February and I come out with the real estate numbers, don't be shocked, because keep in mind last January was crazy. So our average sale
They're going to look bad.
they're going to look terrible.
For the next 4 months.
They're going to for probably the next 4 or 5 months. You're right. The number of sales will be down. The average sale price will be down. It's just the way it is going to be. And when I say down, drastically down. But if you look a little bit more long term, you realize that we're still in a very, very solid market. But when I do, over the next 4 to 5 months, when I do tell you the numbers, don't think the sky is falling. It's just we went through probably the craziest 5 months in the history of the real estate market here in Ottawa at the start of 2022. And I think what we're going to see, even if we do have a decent 2023 to start the year, that's still going to be way down from where 2022 was. So don't be shocked.
Is it April or May? Probably April or May that we're really going to start to hear about now the price drops are going to be reflective, because we saw the increase in the first 4 months of last year, so therefore we're going year over year. We might have an exact reverse, to be honest with you. We might see terrible numbers in the first 5 months compared to the first 5 months of last year, but then we might have great numbers compared to the next 5 or 6 or 7 months of 2022 compared to what we're going to see in 2023. So it might be an exact reverse. It's hard to tell.
Which is why we should be looking more at averages, right?
Yeah, looking more at averages and also long term. Like I ran into a guy at the mall the other day. I guess we got to get out of here, but I ran into a guy at the mall who was telling how the prices are going down, blah, 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 everything's screwed. And I said, well, if you're looking at real estate as a short-term play, absolutely. But if you're looking at a long-term play, don't worry about it. Everyone's good.
All right.
Birthdays?
It's vowel time.
Josie Bertos and Jeanette Oliver from MBO celebrating their birthdays this week. So happy birthday.
That's it, just the two?
That's it, just the two.
I have one, but before I get to that, I am sailing around the British Virgin Islands for the next 2 weeks with my girlfriend, Petra, who's with me today. So I won't be on the show, so Dora will be here for the next 2 weeks. But I do have a birthday on the 27th because I won't be on the show. My beautiful daughter, Taylor, turns 21 on the 27th. So happy 21st birthday. Sorry, I'll be on the islands drinking margaritas
So
and
you're
pina
not going to be
coladas.
here for your daughter's 21st birthday.
Thanks,
Father
Frank.
Right there, Father of the Year award.
Must be looking to buy a house.
She'll be, well, Hunter has more money in his bank account than I do, so he will.
Talking to the guarantor.
Yes.
Oh, the guarantor, yes.
Or a co-signer.
Yeah.
Paul at paulrushforth.com, Frank Ken at mortgagebrokersottawa.com. Have a great week, gentlemen. Enjoy your vacation, Paul.
Yep.
Thank you.
Have a great vacation
Yeah.
and continue to support local businesses and charities.